morning, good afternoon, or good evening, depending on your time zone. You are watching Seeds for You by Sherry. And if we are meeting for the first time, I'm Sherry. You may see this show on YouTube or you may see it on cable television. Wherever you are seeing it, please, if you're seeing it on YouTube, please like, share, and if you have been shacking with me, it is time for you to subscribe. I have a lot of viewers who are not subscribed, so please consider subscribing today if you hear anything that you like. Today we're going to be talking about insurance. We're going to be bringing awareness to the topic for those of you who do not know what you need to know about insurance. We're going to have try to hopefully answer questions for you that you may have in your mind. But today I have with me Nekia Agor.
Yes.
And then I also have Chris Tucker, and I'm sure that you will remember his name because you probably know the celebrity, Chris Tucker. Okay, so they share this name. And so we're just going to go ahead and get started. But before we do that, we'll be right back after this. Okay, thank you. If you are just joining us, you're watching Seeds for You by Sherry, and I am Sherry, and today we're going to be talking about insurance. I have with me Nekia Agor, and I also have Chris Tucker. They're going to be sharing their expertise on the topic, and I hope that you will learn something that you may not know on today. Okay, so we're just going to get started. I'm going to start with you. First of all, tell us just a little bit about yourself and how you got involved in insurance.
Okay, well, I didn't come from a background of, knowing too much about life insurance or, finances or anything like that. I actually came from a background of, food service. I was in first food service for a while, for like 10 years. That's a passion of mine. However, I found it's a grind, right? It's a grind. Okay. And it's something that, I wanted to build my own thing with. So I was always looking for something else to get into as far as like entrepreneurship. Okay. And life insurance came into my life by way of my mentor, Joe. He actually found me on Facebook, sent me a message, and, I was always keep an open mind to learning new things, especially things I'm not familiar with. Okay. Because I didn't learn much about finances growing up, but your parents teach you what they can teach you what Absolutely. They know. So it's my mission or it's my duty, my obligation to, inform myself and educate myself on topics that I don't know. So I was always open to the information, asking me if I wanted to learn more about finances, insurance, entrepreneurship, making extra income, building your own brand. So for sure, I was like, yes. And from there, it's been life-changing. I've learned so much since I've been in the industry, things that are able to help myself, build a legacy for myself and make sure I pass down the information to my children. Awesome. And, start a trend of generational, break the generational curses.
Awesome. That's very wise of you to do that. And I neglected to say that the type of insurance that we're going to be talking about today is life insurance. So I just wanted to add that. Please, Chris, tell us a little bit about you.
So I come from a military background.
Okay.
It kind of gradually happened. So when I got out, I didn't really have a financial education on, where to invest my money, where to put my money coming out of the military. So I was kind of limbo for a while, and then I kind of stumbled into life insurance.
Okay.
And really, a lot of us, especially veterans, they don't understand the importance of having life insurance and what it can actually do, not only for yourself, but for your family. So that's when I really got involved really heavily into the life insurance realm, is because I understood, one, because my mom was actually behind on her retirement.
Okay.
And she didn't really have life insurance.
Okay.
So through being in this business, I was able to help her retirement because she was actually losing in her retirement.
Okay.
Because it wasn't properly, funded. So that's kind of eye-opener for me as well. And just being a community figure, going out in the community and seeing a lot of detriment that happens to families unexpectedly, and how they have to do GoFundMes and things like that. I really took that to heart. What I also took to heart is seeing a lot of older people still working a job, and that kind of really bothered me as well. So that's why I was like, well, what can I do to help people? And that's why I really got started in this industry, because I understand that there's a need, and I'm really passionate about helping people not only further their retirement, but actually live a better quality life. And I know
Okay.
life insurance has the ability to do that.
Okay. Well, I want to thank you both for being here today. I actually met you in Walmart.
Yes.
And you approached me about insurance. And so I figured, well, let's just kill two birds with one stone, because I am not really educated on this topic. And so this gives me an opportunity to learn from you guys so that I can do better. And then also to bring awareness to our community, to the people who are not well educated on it at the time. So tell me a little bit about life insurance and why we should have it.
Okay.
What is it really doing for us? Because usually when you hear that, you think about death.
Yes.
Right away. You think about death. It's like, oh.
Yes. There's definitely some, that's something that people know, life insurance. That's most people, when they think about life insurance, they do think about death. However, a lot of people are not, informed about how you can actually use life insurance while you're alive. Of course, it's there to, for just in case, because you never know, when your time is.
Right.
But people have been using it, for generations and generations to actually build wealth, to help them on their taxes, reduce their taxes, to invest in certain things like certain assets, to pass down money to their family for generations, and actually protect themselves while they're alive,
That's very interesting. So, Chris, tell me about like an elderly person who may be behind on life insurance if they have it at all, because a lot of people feel like if you have it on your job, then you're good. Tell us about that if you only have it on your job and you look at retirement.
Okay, if you're looking at retirement, having life insurance through your job is what we typically call is a group plan, but it really doesn't have a lot of benefits inside of it versus having your own personal policy. And let's be honest, a lot of jobs are laying people off left and right. So it's good to have your own personal plan versus one through your job, because if you lose your job or you move jobs, then you're not covered, you're not protected. That's not in all cases, but most cases. So a lot of people fall trapped to, I have it through my job and thinking they're good. And then when something happens, they say, well, I thought I had access to this. And I'm like, no, well, according to this, you only had access to this.
Wow.
So through your job, you might not have living benefits. You might not have, could put a lot of jobs, they don't have it where you can put cash away for a rainy day. And using life insurance, a personal life insurance policy, through whole life or an index universal life insurance policy, you could build cash value that you can actually use to build a proper retirement. Okay. And according to statistics, 50% of Americans are not even on track for retirement and don't even have retirement plans.
Okay. So now this is something else. Like if you're a person and you don't have it and all of a sudden you're coming into this knowledge of learning that maybe this is something I should look into, but you are aging. Okay. What is it that they're going to put you through before they would decide whether or not they're going to insure you?
First, you would have to go through what you call a medical screening, medical exam. But for some that are between like 45 and 50, they can get something called a final expense, where they really don't have to go through any like medical details for them to get covered. So that's a way for elderly people that don't have life insurance, they can get coverage just enough for them to where they don't have to people don't have to worry about what I'm going to do with grandma or grandfather or something, or somebody like that that's struggling with medical issues.
Okay. So Nekia, tell me more about the final expenses, that type of insurance.
Okay. Final expenses, like the name implies, it's mainly used to cover those final expenses, the burial, the funeral arrangements, things like that. People also, may not think about, travel expenses as well that they can cover when the family has to travel to attend the funeral and make arrangements, things like that. But it's great to have in place on its own, but also as a complement to another policy. It's for people that, like Chris said, from 45 to like 85, where they just want to make sure they have something in place where their premiums are not going to go up every month. They're going to have it for the rest of their life. And they don't want to do any kind of medical screenings. Okay. So it's great to have in place, as a supplement, because it actually pays out very quickly. It can pay out in 24 to 48 hours, as opposed to, having some type of other like term or a whole life policy to where, you know, we have to wait for that final death certificate to actually get paid out. So you can have some funds, and they don't have to put off, you know, the final expenses, the funeral for, you know, weeks and weeks, which happens.
So if you have the other type that is not final expense, you said that one takes longer to pay out. Like
it just depends on, you know, a lot of companies actually require you to have that final death certificate.
Okay, so what would be the longest amount of time that you would expect to get a payout from that? Because some families may be waiting for that to come through to pay for a funeral.
Yeah, that's why final expense is so important. But it really all depends. It depends on the company. Really, the companies all have their own, you know, their own rules and as far as paying out and their own time schedule. So it depends on the company.
Okay. So Chris, if you, like, you're supposed to have somebody that should take care of the business after you're gone or whatever, how does that work with that person? Like, is there something in particular they need to know before they can start accessing the money for that?
Like if a business owner, if let's say you have a family business,
right?
There's a type of a policy for business owners.
Okay.
That, let's say, if you have a relationship with that person, let's say if you're related or you have a business relationship, then you can get insurance on that person, because it's really called key man insurance. So let's say somebody dies and they're like the main breadwinner in your business, they're the one that brings revenue. Well, you're going to have to find time to recover to hire a new person or, you know, replace that person, so your business can keep running. Okay. So that allows you to still have, you know, a good little bit of money so you can figure out what you're going to do, so you're not scrambling and your business doesn't go under.
Okay. And so you guys are working in life insurance right now. Tell me what your experience is like for trying to pitch to or in the Black and brown communities. How does that work? Or do you feel that we are educated on the topic? Or do you run into a lot where you feel like they don't know? And then how do they respond?
It varies in the Black and brown community. I would say in general that we are very uneducated as far as when it comes to knowing about life insurance and things that it can do outside of just leaving money for your family. Some feedback that I've gotten, of course, you have people, it's usually like, I guess, older people that are like, oh, life insurance, I don't want to talk about that. I'm not going to die. Like, I don't want to get prepared for death, you know. But then you also have people that, you know, are intrigued and, you know, conscious and realizing like, okay, this is something I got to be a grown up now. Like, it's something I need to be responsible, you know, to make sure I'm preparing myself, preparing my family, and making sure that I have something in place just in case something happens. And then, of course, they're going to be, you know, more open to hearing what they can do with it outside of just leaving money for their family. So,
Okay, so all of this information is very interesting so far. So if you were speaking to someone in the Black community right now, what would be the most important thing that you would want them to know?
I would say definitely, I mean, life insurance should be a priority, because we want to, you know, avoid passing down, you know, debt, have this, you know, this history of passing down debt to our families, and actually pass down some type of wealth, which you can do with a simple policy, and it doesn't cost as much as a lot of people might think. It takes a little bit to, you know, to build a legacy for your family.
Okay. Chris, tell us a little bit about that cost, because that may be a concern for a lot of people.
So for the cost of life insurance, you can, for young people, you can buy life insurance for as little as a cup of coffee. It's relatively cheap the younger you are. The older you are, the more you wait, because a lot of people have the put off mentality of, I'll do it when I'm this age, I'm doing it when I'm this age. But sickness has no age.
Exactly.
Death has no age.
Okay.
So, you know, it's always good to plan ahead rather than you get to a position in where you're like, now I'm stuck in this predicament and I had ample time to plan ahead, but I didn't plan ahead.
Okay.
Mm-hmm.
So let's say that my plan costs me $50 a month. Right. Am I going to have to worry about that cost rising at some point, or is it something that?
That is a beautiful question.
Okay.
So you have what you call a term policy and a permanent policy.
Okay.
With the term policy, you have to renew it. Unfortunately, you do.
Okay.
But you can also convert it into a permanent policy. But with a permanent policy, you never really have to worry about, if you lock it in at that age, you never really have to worry about the cost going up.
Okay. But you do with a term policy.
Yes.
Okay. All right. And what would cause it to go up? Because, okay, so you're saying that I have to renew it. What does that really mean? Am I going to have to go through another physical exam?
Yes, ma'am. So you have a 10, 15, and 30 year.
Okay.
So let's say you want to do it every 10 years.
Okay.
You would have to, then you're older, so let's say you're 40. So it'll cost you a lot different from 30 versus you're 40.
Okay.
And let's say you do it at 30, you have a 30-year term, and now you're 60 years old, and guess what happens? Now you weren't locked in versus a permanent policy. You didn't lock a permanent policy in when you were age 30, you got a term, so you said, well, I'll renew it in 30 years. So now that 30 years, you're older, so now the cost is a lot more because why? You maybe had some health problems occur during those 30-year time periods, so they play a factor into life insurance as well.
But I can get a locked policy at any time.
Yes, ma'am.
Okay.
So there's typically there's cutoff ages to where
Okay.
you can't really get insurance depending on how old you are.
Oh, okay.
So you're in your 70s.
So it's possible that you can not be insured at all because you've reached a certain age?
Yes, ma'am.
Oh my. So what is that cutoff age?
It varies because every company is different.
So it's based on the company.
It's based on the company.
Tell us about your company. I don't think we talked about the name of your company.
So we are actually independent agents, but we're partnered with our agency, New Modern Wealth, out of Killeen, Texas.
Okay.
Yes, and we're really, our whole, goal is we want to educate and help 90% of the Central Texas area actually, put something in place to protect their families, to build a legacy and to make sure that, they're building generational wealth.
Awesome. That's something that the Black and brown communities, I might say, really need to work on. Mm-hmm. So who is your biggest clientele? Like, which community are you seeing most that is purchasing these policies?
It varies. We say we are here to educate. Now, when we say the Black and brown community, it's not excluding any other races. It's just that the Black and brown communities are the least educated on it. So, we help everybody. We help everybody, but we are, people that don't know the most about it. Those are the ones we, want to make sure it's like a catch-up game. Okay. And a lot of communities, other communities, they've known these things already. They know how to use life insurance. They know what it is. They know what it can do. And it's just time for, our community to catch up with the information. That way we can, benefit and help our families as well.
Thank you for that. And that's exactly what I wanted you to point out. I just want to make sure that we get that out. So that's very interesting. Tell us something that I may not be touching on right now that you think is very important for our audience to know.
You want me to answer that?
Go ahead.
Right now, we have a deficit in America right now, which everybody depends on in the future, which is Social Security.
Okay.
On average, Social Security spends around $945 billion in Social Security alone. And according to the book right here, I'm gonna quote this book, The Power of Zero. If that's furtherly left unchecked, we could further see a three-system tax bracket system, where Americans could be possibly taxed 25%, 66%, 63, and 88% of the income tax.
Wow.
So Americans that are really dependent on Social Security for retirement, they might want to, look a little bit deeper into planning ahead versus waiting to that age. Because let's face it though, I'm in my 30s right now. Social Security might not be around when I hit 64.
Wow. Yeah. Okay.
And they just moved the retirement age from 60, was it 64?
Like 72?
72.
Okay. So for somebody that's interested in starting a life insurance policy, what would you tell them that they need to begin to do? And that could be either.
Just do your research, of course. Do your own independent research, but also get with a licensed professional, that has some experience that can explain to you, what your options are. And that's going to actually sit down with you and go over your goals, your financial goals. Somebody that's going to actually take into consideration your current situation, your lifestyle, and show you, a variety of different options.
Okay. So what happens if something happens with one of your payments or something, or, what happens then? Are you canceled, or if you have something to happen like you lose a job or something?
Did you lose a job?
Like you lose your job or something and you can't keep up with your payments, or you miss a payment. I mean, or do they cancel you if you miss a payment, or?
It depends on what type of policy you have.
Okay.
Typically, a term, it doesn't build up that cash value like a permanent would. So term policies, and it depends on the company as well, because, they're going to they might give you some leeway, they may not, if you miss a few payments. But definitely if you have like a whole life or something with some type of cash value in it, you could typically, they will typically, take your premium, they can take it and use your cash value to actually cover your payment for a certain amount of time.
Okay. And you mentioned earlier something about using your policy while you're living.
Yes.
Can you bring that out?
Yes, sure.
And both of you can speak to that.
Okay, well, I'll talk about the term. Well, with the term, not just about the death benefit, that's what we're reiterating. We show people, people they commonly see like GoFundMe's online for like when people, pass away, but also when people get sick, they might get into an accident or have developed some type of illness and they need medical treatment.
Okay.
There's something called living benefits that most of the companies that we work with, they actually offer with a term policy, to where if the client has some type of illness come up, some type of diagnosis, an accident where they're not able to go to work and make income for themselves and for their family, they can actually tap into their death benefit to cover their medical expenses, but not only that, to cover expenses at home, like their mortgage, their rent, put food on the table, utilities and things of that nature, which is crucial because, a lot of families don't even have $1,000 in case that emergency comes up. Right. And medical debt is the #1 cause of bankruptcy in the country. So it's really crucial for that. And also mortgage protection as well for homeowners, people that want to be homeowners. Is also great to have that insurance to be able to cover the house, because I'm sure you've heard of people that it's like the breadwinner in the family, and they're bringing the income, but if they suddenly pass, what is the family going to do? How are they going to be able to afford the mortgage or even pay the taxes? Right. So if you have something as simple as like a term or any insurance amount that's enough to cover that mortgage, to take that burden off the family.
So how does that work exactly? So you have a term, and then something happens, but you've only had the policy for 2 months. Where does that put you? Well,
the living benefits wise, it is based off of age. So the percentage or the amount that you'll be able to take out, as far as the cash, the death benefit amount. Okay. However, once you get it in place, it can be accessed. Like you can get it today, and then if you need to use it tomorrow, you can.
Oh, really? Okay, so what do you have to add to that in terms of what was the other one called, the permanent?
The permanent side? Okay. So the permanent side is very beautiful, because you could use it, that's what we call life insurance, not death insurance, right? Right. Because you can use it.
Oh, that's a very good point.
More than just, like he was explaining, living benefits. You can use it to pay off a mortgage. You can use it to send your kids to college, buy their first car. You can even use it to invest in real estate and start up a business.
Wow. Now that is very interesting. That should be a great selling point when you're trying to tell somebody how much they need it, but they're a little bit hesitant because they're worried about the cost, or they're not thinking about dying. But when you explain it that way, that to me is an added perk.
And also, you can use it to build a tax-free retirement. In the book, The Power of Zero, David McKnight explains why there's 7 different tax havens that you can use to grow your money tax-free. One was a Roth IRA, and the other one was life insurance. So we call life insurance the rich man's Roth because you can grow money inside of it and also be able to build and create whatever lifestyle you want to fund if you want to do something, and it also can help for a good retirement plan that it can pay you up to $100,000 a year structured properly for the rest of your retirement.
That's very good. That right there is very appealing. Wow. So I guess my other question to that end would be, so you're saying that if I got a policy today and then I needed to use it tomorrow, how is that based? Like if I wanted to pay off my mortgage or something like that, like I guess my question is, how much is this policy worth? And then say if it's $100,000, when do you have access to the $100,000? Not that you're buying it just so you can get the $100,000 to just use it, but like if something were to happen, how much would you have at that point, I guess is what I'm asking.
Okay, so you have what you call is an accumulation value and you have a surrender value. When you build up enough cash value inside of your policy, you would have access to that surrender value.
Can you explain that, please?
Okay, so let's say you're paying your premiums a month.
Okay.
And let's say, okay, a year you can put up to, let's say $20,000 a year into it before it becomes taxable.
Okay.
So let's say every year you're putting $20,000 in there, and let's say it accumulated to $100,000. Well, you can call the insurance company and say, hey, I need to borrow $100,000 out of my life insurance policy. Instead of going through the process of getting a loan through the bank, and now you get up with a bank, why not pay yourself? And guess what? There's a thing called what you call a participating variable loan that you can use inside your life insurance policy to borrow against, and it still accrues interest if it was still in there. So let's say you bought a business for $100,000. Let's say you invested into a franchise, went belly up. Okay, within a couple of years, that money would be back in there plus interest. My mentor Joe and Crystal, when they talked about when they invested into the car business, they put $100,000 into their car business. Had they would have known about life insurance before they did that, they would have put that $100,000 over time into that policy, then borrowed against it, and then invested into the car business. That way, if the car business went belly up, they would have never lost any money.
Wow. A lot of people don't know this. And then earlier you mentioned do your research. Yeah. So what kind of research am I doing? Am I researching to find out which insurance company I should go with or which policy I should purchase? What am I researching?
I would research, well, it depends on what you want to do. I mean, you can research general information on life insurance as far as like what are the different types, you know, what are the benefits, what are the pros and cons. But, I mean, that's something that you can do on your own. But I would say the simplest way is to get with an insurance broker that can explain it to you and show you, like, you know, real information as far as your specific situation and show you actual numbers for your situation as well.
Okay. So for someone who is green and does not know anything about this, like, how would they know when they have come across a good insurance person? Because, I mean, I don't know anything about it. Is this something that you, licensed insurance, I don't know the proper term to use, but say, for instance, are you doing it because you are getting, what do you call it? Like when you go to a store and you're buying clothes, if they sell you the suit, then they get something.
Commission.
Commission.
Yes.
That's the
Yes,
word I'm
ma'am.
looking for.
That's definitely a thing.
Okay.
I would say, I mean, like in any industry, there's going to be people that are ethical and there's going to be some unethical people that kind of like mess it up for everybody.
Right. Okay.
I would say some things you want to make sure that your agent is doing is actually asking you a lot of questions, because we're able to help you the best when we have the most information about what you want to accomplish, about your current financial situation. You know, somebody that asks you a lot of questions and doesn't just stick you with their favorite product, their favorite company. You want somebody that actually cares about what you want to do. So they're going to do that, and we always like to say it's mission over commission. Regardless of what, you know, is going to pay me the most, what's really going to help you the most.
Okay. You know, and I'm really glad that you brought that out, because you said something about asking a lot of questions. Now, for somebody who doesn't know anything about it and they're kind of hesitant to begin with about getting it for whatever that reason is, and then now all of a sudden they're getting all these questions, sometimes that can feel a little intrusive, you know. But really what you're telling me that it's a good thing if they're asking a lot of questions.
Right.
Because it's helping to find the best fit for me.
Yes.
Very good. I'm glad you brought that out because there was a time when I was pursuing insurance for something and I just felt like, oh my God, these questions, I feel like I'm being raped.
Yeah.
You know, so I'm glad that you brought that out. So that's good to know, people, whenever you are, you have come to the point where you realize that you actually need this insurance and then you go and pursue getting a policy, just know that one of the things that lets you know that you are with a good agent is someone who is asking you a lot of questions.
Yes, yes, ma'am.
Okay. Wow. This is very good stuff. And I'm so glad that we're doing this because you're educating me, you know, and I thought that would be a perfect way to get this information out so that you can speak to the different communities, not just the black and brown, but to all communities who are not educated on this topic, that you're having an opportunity to learn some of the things that you may not know that may help you to make that wise decision to get insurance. Okay, Chris, so you're very knowledgeable. You both are very knowledgeable on this, but it sounds like you like the numbers and stuff. So can you give us a little bit more on, like if you were talking to somebody who was difficult in terms of trying to let them know how much this is a really good, something good for them, a benefit to them, and all of that kind of stuff. And so now they're worried about the money. What would you say to them about this if they're concerned about making payments?
Concerned about making payments, I would really, you know, have a heart-to-heart conversation with that person.
Okay.
And, you know, I'm like, hey, do you mind if can I be honest with you? What's more beneficial in the long run? You making this payment or something happened to you and let's say you have a lot of money in your retirement and something happens, that's all your retirement. Or would you be better having a peace of mind knowing that I know this is going to cost this much, but in the long run, look at the benefit versus the short term. Because when you're a client with me and with Nekia, you're a client for life. So we have your best interest.
Okay.
You know, because some things, you know, we can't see into the future.
All right.
But life insurance gives us that assurance that if anything was to happen at any given moment, that you would have a peace of mind knowing that my kids are good, I'm good, you know, my wife, my grandparents, my granddaughters, grandbabies, nieces, nephews. If something was to happen to me, I know they would be okay.
That's very good. That's very good. So I hope. Okay, thank you. We are back here. Again, I'm speaking with Chris Tucker and Nekia Agor, and we're talking about life insurance. And right now we're going to give you the floor again because you have another point that you want to make. So we're happy to hear it.
Yes,
and then
yes.
We'll come
Actually,
back to
I
you.
wanted my partner here.
Okay.
He wanted to share a story, and then I'll, you know, kind of tell my experience with it.
Okay, awesome. Then Chris.
Okay, so one of my business partners, they had a niece, and they were out at a pool function, and unfortunately, her niece drowned in the pool. But she was so persistent about making sure that she had life insurance.
Okay.
So before they paid the premium on the life insurance, they said, hey, will this still be covered? And the life insurance company, believe it or not, they honored it.
Wow.
And that's why she is a crusader for this cause, is because you never know what situation can happen at any given moment.
Wow.
And this is a personal story of mine. I had an agent, another business partner, who he had an uncle, and we kept trying to talk to his uncle, talk to him. He said, I'll get it tomorrow, I'll get it tomorrow, I'll get it tomorrow. So he gets a phone call one day. Massive heart attack in his sleep. He's gone.
Oh, wow. No insurance.
And the grief that I felt, because I understood his pain, and his wife had to she had to move out of the house, And all it took was just sitting down with a person like me and Nekia, or anybody, any life insurance agent, and seeing how much of an impact it could actually have for your family.
Wow.
That really tears families apart because now money's involved.
Right. Yeah.
So that's another reason why we crusade so hard, is because sometimes we may come off as annoying, but we know that we're doing it for a good
And
cause.
you're doing it for a good cause, and you're really helping people if they
For
would
sure.
just really take the time first to listen and learn, and then to actually take the action.
Yes, ma'am.
Yeah, awesome. And then you were going to tell me something about policies for children.
Yes, yes. Getting policies for children. A lot of people may not think about it, or people, they always think about death. So of course we don't, that's not the primary reason. I mean, for a lot of people that might be, but for us, we say get insurance for your kids. First of all, getting insurance while you're young and healthy, is the best way to have affordable premiums. It's never going to be more affordable than getting it while you're young and healthy. So when children's policies are literally pennies on the dollar.
Really?
Yeah, it's so I got policies for my kids, and it's not because I expect them to prematurely pass away. It's really for their future. I want to make sure that I have them something in place to where they can have a better quality of life than I did growing up. Not that it was bad, but it could be better, right?
Right.
I can give them a head start into their adulthood as well, because they have whole life policies which accumulate value, so it's like a savings account for them. So I'm able to save money from now. They're little now; they're 2 and 7, so I can save money for them in their policies now until they're grown.
Wow.
And I can use it to purchase things that they need, those big purchases. Maybe it's prom, maybe it's their first car, maybe they want to help them put a down payment on their first house, or maybe they want to be
Wow.
entrepreneurs or go to college. Those are some things that I plan to use the policy for, to help fund those things.
So how does it work if you happen to use the policy for something? You use it because they're getting a car to go away to college. What happens now that you have tapped into that money?
Well, it does. So for the whole life, for the policies, they have a permanent, they have the cash value side, and they have the side that goes to cover your death benefit. So a portion of your premiums that you pay every month is going to go to paying off the cost of the insurance. That's the death benefit. But a portion goes into a savings account, and that's the side that you can actually access, and you can borrow against to make purchases and purchase assets and things like that. So when you do take it out, it's going to reduce your value in your policy. However, if you have a certain type of policy, like if you have an IUL, it's going to still, accumulate value because it is tied, the insurance companies, they invest into the stock market. But they give you a guarantee to where, if how a stock market works, right? Typically, the stock market goes up and down. You can make a lot of money in it, but you can also lose money in it. But what the insurance company does, it guarantees you that you won't lose anything. So when the market goes down, you don't lose anything. You're just at zero. But when the market goes back up, you actually start accumulating. So it helps you protect yourself from losses, and that can be the same thing for retirement as well. That's why it's so great for retirement as well.
So like if your house catches on fire and all of that kind of stuff, it can help for that.
Yes, ma'am.
So what do you say to someone who has children, Chris, and you're asking them if they want to get a policy for their children? Because that's probably really hard when you say something, because nobody wants to think about that in terms of losing their child. But, I mean, let's just be real. That's the first thing you think about when somebody's approaching you about life insurance.
Well, when somebody has kids, I was like, well, what is the vision for your kids and ultimately for your family?
Okay.
Let's just take death out of it.
Okay.
Let's look at the positive things that they could use inside of this. Think about instead of going to a traditional bank, putting money in a bank, you could put this here. That way, when the time arises, you could borrow against it. They can convert it into a retirement plan if they want to at an earlier age, if that's what they want to do, rather than say, Dad, I don't want to spend this. I got a full ride scholarship, or Mom, I got a scholarship here. Just, thank you for teaching me about money. Like our mentor, Jordan Crystal says, we didn't come from a wealthy family, but a wealthy family can come from me.
Very good.
So you're speaking to the inner queen and the inner king, and that person's like, hey, do you want to build something short term, or you want to build something long term for your kids?
And so at what age can the child themselves actually access the money? Because while they're growing up, you're the one that's putting into it, and you're getting that to a good point for them. So at what point does it turn into where they become the owners of it? I guess is what I'm trying to say.
Okay. You asking me?
Well, either can answer.
Okay.
18.
18?
Yes, ma'am.
Okay. That's typical age for all of that. Very good. This is very good information for me because I've never researched it. I'll just stop right there. I never researched it. So this is very good information for me to learn because I was always that one that was, hey, I got to do my job, you know, and you think that that's all you need, you know, but until you actually start asking the questions or somebody actually sits down and then they bring this information to you and explain it to you, then, you know, maybe that's the reason why a lot of people, well, I don't know how many, I don't know the statistics on it, but maybe some people don't have it because of all of this information that they're lacking. Yeah. Because hearing it now, even when you used it earlier, the term where you said, I don't know, one of you said it's called life insurance instead of death insurance. That right there alone is something to think about, you know,
Right.
because you just think that it's about paying for your expenses when you die. But when you explain it like this, it's almost better than having a bank account. Like, you know, if you can do all of this with it, then you don't need to be as concerned about your bank account.
For sure. I'm glad you brought that up. Yes, it can be it's different vehicles that you actually put your money in. I mean, money grows at different rates. I mean, you have your fixed, like that would be like a bank account that's saving money in a bank account. You don't really gain too much interest. It doesn't fluctuate much. It pretty much stays the same. They might be giving you like 0.5% or if that.
Yeah.
Your money doesn't grow, but it's accessible. You know, it's liquid, so you can always, you know, access it. And then there's variable. It's like the stock market, you know, it goes up and down, it has risk. I mean, you can make a lot of money, but you can lose a lot as well. And then you have indexed. That's what we kind of show people more about, you know, put your money in something indexed, gives you that protection to where you're able to take advantage of when the market goes up. But when the market goes down, it's at zero, you just don't lose anything.
Okay. So you use the word index. Can you explain to our audience what that actually means? Index.
Index, yes. It's just like, so index is, like I was saying, the insurance companies, they actually use a portion of their premiums to actually invest into the stock market.
Okay.
And then, so they invest that for you. They give you a portion of the gains, right?
Okay.
So when the market is going up, you can get some great gains depending on the type of policy you have to a certain amount. But when the stock market goes down, you don't lose anything. They give you that guarantee.
Okay. That's good. And you know, and the reason why I wanted you to explain that is because a lot of times when you're green and you don't know anything about these, and then you're hearing these different terms, even though you're using it while you're explaining something, that doesn't necessarily mean that somebody has a full understanding of what that
Right.
actually means. So I do appreciate that. So both of you are insured, correct?
Yes, ma'am.
Okay. So if you were talking to me about purchasing, and I know you said you have to ask questions and everything like that to find out what's the best fit, but which one would you say is most popular out of the different policies that you are aware of? Other than, I know permanent is better than the other one, right?
You want to take this one?
I would say term might be more popular just with our demographic because of the, you know, people's budgets.
Okay.
It's really affordable and you can get a lot of bang for your buck. So you can get a lot more coverage and you don't have to put as much into it. And then, you know, it's a just in case. So that's just dealing with our demographics, but it really just depends on people's situation and where they are, you know, financially, their budget.
Okay. So it sounds like it's not breaking the bank.
It doesn't have to.
But it can. So if you're spending more on a policy, is that getting you more, or is it just because of maybe your situation, because you're an aging person, and so you're spending more for that reason?
It could be. It could be your age. It could be your health history. It could even be like where you live. You know, it's all, if you just think about like, it's a risk for the insurance company. So that's how pretty much they, you know, they take into many different factors, but it's a risk for the insurance company. So they want, it's not, and that's what we like to make sure people understand. Like, life insurance is not a guarantee for everyone. It's really a privilege because not everybody can get it. It's not accessible for everyone.
Wow.
You have to be approved for it.
And then, that's the first time I ever heard anyone say that, too, that it's a risk for the insurance company. I never thought about that.
Yeah, so they take into account your age, your medical history to kind of determine like an estimate of how long you're going to live.
Okay. See? It's good to know all of that. I hope you guys are getting something out of this. I am. Okay. What else can you tell me about insurance that I might not know, Chris?
So another thing about insurance is there's so many different types of insurance companies out there, so many different types of insurances out there that that we unfortunately we don't really too much deal with because we're more protection focused for people's money.
Okay.
And there's some other things that you can use inside of life insurance as well. There's other types of provisions and different things that other people can use. Like you got, if you get into an accident, you can use that. There's a rider for that. There's a lot. There's one that only specifically caters to debt. Let's say if you got a house and something you pass away, you can access that life insurance policy and it pays off your house.
Okay. But it has to be used for that.
Yes.
Okay.
This is just really nitty gritty details that you want. Like we tell you, it's so many variables that I can't explain because it's so much.
Okay. So if a person is like they're the oldest person in the family, not specifically the breadwinner, but they have children, and then they kind of want to look out for them. So I would look for a policy that first of all would pay for burial and all of that kind of stuff. But then I can also look for a policy that would include leaving something to my children.
Yes. So you can have actually, that's one thing I was thinking about. You can actually have more than one life insurance policy.
Okay.
So you can have more than one life insurance policy for different various reasons. So let's say you want one for savings. You want one for a kids fund. You want one, hey, I want to buy, I got a dream car or a dream business I want to start. I want to allocate the funds to go here.
Okay.
So there's more than one way that you can also use it to fund multiple retirement accounts. Let's say you want one for just vacation, or you just want one just to live on. You can actually have that too.
Wow. I never knew that. So if you have a business and then you say, okay, well, you're not going to say I'm going to die today, but if something happens and then like you want it to continue for your children, so I could have a policy that would take care of that for me if I die? Is that correct?
Yeah. So you also have what John D. Rockefeller, he actually used this method to pass down wealth to his family. And if you guys aren't familiar with Douglas Andrews, he's a expert on IULs and different types of insurance products, and he talks about something called laser funding. And what that is let's say everybody has a joint bank account. Let's say somebody dies in that family. Okay, they use the death benefit, the rest of the proceeds, and they invest it into another product, like another financial, let's say a Roth or another life insurance product, and then they put that in there, and then let's say somebody else, and they keep doing that over time, either building a generational, wealth vehicle for families. That way kids don't have to worry about going to college, or families, if they want to just start a business, they can just start a business. They don't really have to worry about where are we going to get the upfront cost from.
Oh, okay.
Yeah, so you're basically building a family bank.
Wow, I heard of that before.
Yes, and that's what we help people with as far as the life insurance part. And how you would do that is simply you have life insurance on, people in the family, different people in the family, to where when they do pass away, you have the beneficiary as a trust. You set up a family trust to where that death benefit will go into the trust, and then the family will have, access to use it for however they want to use it.
So you're setting up a family bank, basically.
Yes.
So which insurance is that? Is there a name for that particular one, or you just bring that out?
No, that's simply just naming your beneficiary to the trust, and I would have to say you need to. I advise people to always get with a trust attorney to have that set up properly, to make sure it has all the right stipulations on it, to make sure it's funded properly and things like that.
Oh, okay. That's interesting. So you would have like a joint account, like say you got 5 kids or something, so or 5 grandkids, and so you have all 5 of them on there, and then if somebody dies, what are you saying about the part that you're feeding into it when a person dies?
So let's say, glad that's a good question. Let's say somebody dies. Instead of putting your money in a bank, let's say a bank will be like, hey, put it in a CD. If you don't know about the rule of 72, is you take that number, you divide it by 72, and that's how long it takes your money to double. And there's some insurance products out there, if they're structured properly, it'll give you more returns than you would a CD at a bank or growing at a rate of interest that the bank would give you just sitting in that account.
Oh, okay. That's interesting. So the part about, I might be a little lost here. The part about when somebody died and it sounded like you said that you're like funneling money. I mean,
Yeah, you could.
did I catch that right?
Yes, ma'am. So you could essentially funnel instead of let's say you have a bank. Okay, I want to put this in the bank, and then the rest I want to put into another insurance product.
Okay.
So because I know the bank's not going to give me a higher rate of return on my money than this product would.
Okay.
So essentially, you'll be thinking further ahead because why the money's growing tax free. So whatever money that's growing inside that bank is taxable. So you want the thing is to avoid paying taxes, not the Wesley Snipe way, but the legal way.
Sorry, Wesley.
Yeah. So that is essentially that's how people, rich people, that's how they avoid paying a lot of taxes is using life insurance to invest.
Wow. See, I never knew any of that. Never knew any of this at all. That's very interesting. Definitely gonna have to sit down with somebody. Yeah, definitely gonna have to do that. Huh.
I know it was a lot to throw at you at one time, and the audience out there, they're like, what's going on here?
That's okay. The good thing about this is if you're watching it on YouTube, you can play it back over and over and over again and try to catch and get a better understanding of whatever you think you missed. Huh. I don't know. What else guys got for me? What else you got?
Something that you mentioned earlier about how getting insurance for someone that's not the breadwinner, I think that's something that's kind of overlooked sometimes, is you might have a stay-at-home parent, and people may not, find as much value. They're probably like, well, why didn't they get life insurance on this person? Like, they don't bring in any income.
Wow.
But that person, they add a lot of value to the family.
Exactly.
It can be costly to replace all the roles that person does. I mean, they might taking care of the household, taking care of the children, cooking or cleaning or, whatever they provide for that family. That's something that you want to make sure you protect and you plan for.
Wow, that's very well put. And I'm sure that if you're that person that we're referring to, you have a lot of value. So don't think that you don't.
Right.
That was very good. I'm learning some really good things from you guys. So I really do appreciate this talk today. It gives me something to think about for sure and to even share. So I think you guys are doing a great work. And it's just keep doing what you're doing because there's so many people. It's just a matter of them getting this information, and that'll probably make all the world of difference to them. Because just like me, I was just thinking that, I have life insurance through my job. And nobody ever said, yeah, but that's not enough, or that you can do more or you can have more. So this is very good information. So we're about to wrap up here. We're getting very close to the end. So if you have any final thoughts or if you want to say anything in particular to the audience or just anything that you might want to share at this point, this is your opportunity. We have about 4 minutes left.
Go ahead.
I would say if people are looking for a career change, or if they're just, not happy at where they're at currently, I would really consider this industry, especially if they have a heart and a passion to help other people.
Okay.
This will be a great industry for them.
That's very good because that's another thing that we didn't cover in this interview is like, what is it like for you standing in the position of helping people in this capacity?
Yeah, I would say, yeah, a lot of people think of it as like we're insurance agents and it's all about sales, but we're really more education focused. What we do is noble because we are helping people at the end of the day with something that's very, near and dear to their heart, their finances. So it's really less about, the sales part. We want to make sure that people are informed about their different options, informed about what's out there and what can actually help them and benefit their family. So that's why, that's why this is it's a great field to be in, especially, I mean, like Chris says, if you're someone that wants to help people, you're somebody that likes to teach people, explain different concepts. Also, it's in the a number one industry for creating the most millionaires. So, it can be lucrative as well. And you're building your own legacy and having your entrepreneur endeavors, but you're doing that while helping people.
That's beautiful. That's beautiful. So to my audience, I would like to say you have a lot here that you have now that you can go on and use. You can search out for an insurance agent to get the proper insurance that you need, life insurance, not death insurance, life insurance, look at it that way.
Yeah,
And then
sure.
also if you want to look at it as a career choice, because sometimes, people get laid off, they get fired, and then they're trying to figure out what am I going to do next? Well, this might be your sign that you should probably look into this, especially if you want to help other people. So that's our show today. I hope you enjoyed. Again, if you are seeing this on YouTube, please give us a thumbs up. If you have not subscribed, please consider doing that today. And if you're watching this on television, then thank you for joining us. We appreciate your time, and we hope to see you back here for our next show. Thank you very much for joining us.